Good morning, Quasar Markets Live. We are back, and I am so happy we have an amazing guest here who I'm finally getting to see for the first time live. She has been helping us out for years with Steve and Big Beat and his projects over since COVID. Anne-Marie Boyan, how are you doing today?
I am doing absolutely great. Excited to actually share some screen time with you and folks that are just looking at this market and wondering what is going on.
Yeah, that's exactly it, right? I was talking to you before we came on, and my line of the last month or two have been tweet analysis is more important than technical analysis, which for folks like you and I are not exactly what we're used to talking about, right?
Absolutely not.
So I wanted to ask a little bit about background. I'm actually going to bring up your site and what you do here with the trading book, and wanted to ask you a little bit about your background because I was fascinated as I started to read a little bit more into your background today.
So you know what? I currently sit in my dream job, and it took me, oh, I don't know, I'm 60, so it took me about 30 years to figure out what that was all about. And I began as a mathematician and really enjoyed, actually, I wanted to be a doctor when I was young. And I had an advisor when I got to my pre med program. I had an advisor that sat with me and said, you know what? You have the mind of a scientist, not someone who's going to have a good bedside manner. And it hurt my feelings, but he was right. He was right. And I took his advice and shifted into biostatistics. And so when I graduated and then went to grad school, that was really the background I had, statistics and mathematics, but in the biology field. And my
Right.
first job was as a neuroscience researcher because they were working on a vagal nerve stimulator for intractable epilepsy. And
Okay.
so intractable epilepsy is something that an epileptic suffers with when medication just does not stop breakthrough um, seizures.
Right.
And so they install something on the vagal nerve. And for folks who can sort of see a wiggly aura, it looks like lines on a hot um, tarmac or something like
Right.
that. They can press the button and it would shock the vagal nerve and it would circumvent the seizure.
Wow.
And so that was the space that I stayed in for a while. But way back in the 80s, that was just, you didn't make any money if you were a researcher, none at all.
Right.
And so
Yeah.
you sat in a room with all of these brain surgeons talking about what it is that they're looking at and what you can do. And I thought to myself, wow, these guys are doing things to enjoy their lives that I could never see out of living past ramen noodles. And so, very interestingly, I met a recruiter. She ran a recruiting company, and I have many hat tips to her, fabulous lady. She said, hey, why don't you recruit technical people for me? You can speak the jargon. I just need to teach you about the recruiting business. And so I literally was in the recruiting business for 14 years using the combination of my mathematical background to connect with these folks, but then also to understand how people make decisions. What is it about? How do they measure how they feel about something? Where were they pressure points? And it really taught me a lot about the mental state. And I absolutely burned out on that after 15 years. And I said, you know what? I'm going back to technical stuff. I'm going to see how the stock market works. I've been very successful. And so, you know, the saying goes, how do you make a small fortune in the market? You start with a big one. And so, so I went into the market space and I said, you know, how hard could this be? You buy low, you sell high. And then I started learning about how people respond to price, how they respond to other people's opinions, how they double think themselves and overthink and get caught by analysis paralysis. And the culmination of all those years really has put me in the perfect job. I feel so blessed to enjoy every moment of my day. Literally, I get up before I brush my teeth, brush my hair, do anything. I'm in my office saying, okay, what's the market done while I've been asleep?
Yeah, it's a blessing and a curse too.
Oh, yeah.
But it matters if you ask my wife at which point is it a
Yes,
blessing
I
or a curse.
know.
I'm with
Our
you.
spouses
Is
feel
you
it's
can't help
cursed.
yourself, or
Yeah.
or the little beep goes off on my phone that says something moved. Because for
Yeah.
me, I'm also on the crypto side, so our stuff's 24/7, and those beeps go off at 3 a.m., 4 a.m. as something just moved. But yeah, I'm with you. And there's nothing, but you're right. I think that once we find that, folks like us, when we were talking about a mutual friend, Agnieszka Wood, who comes from a similar background to yourself that we have on here, once we find that, it seems like we just dive in and love it. And it's a combination of the teaching and educational aspect, because I know I've seen it with you. Like I said, back during COVID, when you were helping restaurant people that Steve had put together a Slack channel for, that were looking to pivot and try to learn how to trade. When someone would be successful with a tool that you taught them on an option, I remember listening to you talk about a butterfly, the first broken wing butterfly I ever heard of was through you. And seeing how proud you were, one of us executed that and actually won. And it is so great, which segues us into what you do now, which is the trading book. And I do have up here your site for people, and I will share across the bottom how they can get to you. So tell me a little bit more about the trading book and what you're doing now.
So when the trading book is actually called the trading book because while I was in the markets about maybe 5.5 years, and McGraw-Hill came to me and said, hey, why don't you write a book? We need more women in the space. We need to see how we can use what it is that the market's all about. And I wrote it in 4 months. And so I wrote the companion, and then they put up the website for me. And so at the trading book, it's a combination of how to look at the markets with a settled mind, how to look at price as the ultimate indicator of how people feel about where they're positioning, and then how to execute that sitting in the futures and the option space. So most folks are actually in the stock space. And my response to that is, hey, listen, humans are the same no matter whether we trade stocks, options, crypto, whatever. Emotion runs the game. And the stock market and the options market and the futures market and the crypto market is a bit of a beauty contest. It's not so much, hey, these guys are solid, fundamental. Those days are gone, right? Fundamentals matter, but it's much more important as to how everybody else feels about the contestant walking across the stage.
Absolutely.
And so that's really what I try to focus on. I do have a private Discord for folks. What I like to do is engage with individuals that say, hey, listen, I'm going to make a commitment to learn. And that means we take time together. We have private Zoom meetings together, but I do want you to hang around for 6 months. It takes a while to understand what price action is doing. And although I say, hey, listen, this is where I am buying, this is where I am selling. I just bought a put butterfly in Meta as soon as it got to 630 this morning, because I said, you know what? That's a resistance zone and we are in a bearish framework. And so I put that out to folks. And then, midday, we'll have a chat and talk about how the trades are moving and that sort of thing. So it's very interactive, very immersive. And really the goal is to educate, but to clean out the noise. And that's something that, what I've loved Steve Big Beat doing for so many years, he really has had that element of, can we just clear out the noise and
Right.
figure out where the action events are? So I'm super excited to get back and spend more time with all of you guys over
That
here.
is awesome. And you just brought up something that I've been, talking more and more, and we've been talking on Quasar a lot about that people don't understand. Technical analysis is really an analysis of psychology. It's the psychology of
100%.
the market, and people don't understand that. I'm lucky I have you, and then I'm going to be followed by Charlie Moon, who is another technician who understands that also. And it's such a big thing that people don't, and beginners don't fully understand. So I love the way that you approach it. You're one of the first people that brought that to my attention, quite honestly, that it really is. It's where people, that's why gaps are important, right? And when things
Yes.
happen, because there's no price action. And when you see something just go straight up, no matter what it is, whether it's tulips, Bitcoin, Nvidia, or the latest AI name, they all do what? They all pull back because it's just the psychology of the market. And like you said, it doesn't matter what you're buying or selling, so it adapts. And that's what I love at Quasar is we've brought in people from the Forex business like Steve Flanagan, and we all talk about the same things. It's the same type of situation. The charts matter whether you're buying a computer or whether you're buying Nvidia. So that's great.
Yeah.
Are you trading any differently right now with all of the craziness, with these tweets and tariffs? And I would ask how you're sort of reacting to that extra volatility that's entered the market.
Yeah, so I am a simpleton. I like to call myself a caveman. Apparently, that's a bad thing to say about being a caveman trader, but I have to tell you, I think traders who've been around a long time that are making money in the market and have survived over time, we've sort of cleared out the noise and we've said things like this. Listen, if I close a weekly candlestick formation and it makes a brand new high, but then immediately reverses off of that, it tells me two things. Buyers aren't excited about staying long.
Yeah.
And sellers are trying to enforce some kind of strength. And so I look at the weekly charts all the time, and I have a 5 simple moving average, and I have a 50 simple moving average. And I look between the week and the day. So what we know about big portfolio managers, because it's very expensive to move billions of shares around every day, so they don't. They use a hedging strategy in terms of their long-term formations. But the moment we lose a 50 simple moving average in something like SPY, in something like the futures market, the ES, Bitcoin, we have got to have a crypto conversation sometime. I sit in Bitcoin and micro Bitcoin, but let's definitely put that on the list for next
Absolutely.
time. But as soon as it drops and that 5 begins to dip down and that 50 is now above price, markets are going to use exit liquidity to get out of the trade, meaning every big bounce where we intraday tactical retail traders are saying, oh, I don't want to miss this next bounce. We are buying, and then big money is saying, thank you. I think I'll get out now.
Like Steve always says, that he wants to be the guy at the door taking your ticket when you leave and saying thank you.
Exactly.
And then when it's sold out later on, I'll sell them back to you at a much higher rate.
Exactly. And so that's really all that we look at from that perspective. And so at this juncture, what I've noticed as a futures trader and an options trader is that resistance matters. And as we remember, because, both of us are hoary-headed, the gray-headed, the word to mean gray-headed, I just have Redkin sitting in my favor.
I don't have any, so.
Right. So we've been around a long time, and we know that when the market moves off of this 50 simple moving average and it begins to drift lower, exit liquidity behavior becomes the most important thing to watch.
Absolutely.
And this, at the same time, volatility expands. So for the trader who becomes tactical and stops really letting their emotions get involved in how we think about things politically and just go, price is the only person who's not lying in the room,
Right.
right? Price is telling me what everyone really feels about the market positioning. And if you can say, all right, I'm going to use coffee talk and chat with my friends and colleagues about what I believe politically, what I believe culturally, whatever that is. And we say, I'm going to separate that part of my life from how am I responding tactically to charts? You are going to find the world of trading opening up to you so beautifully. And you're going to realize two things. Traders, a market is created to facilitate trade. And so what traders have to do is notice where people are saying, you know what, let's agree on price here. This might be too expensive. This might be too cheap. We call that a range, but we can also call it a balance area. And so as people accumulate in that zone, they're either going to sell it out at a premium or sell it out at a discount.
Absolutely.
And all we have to do is watch for how they are behaving around those areas and realize as long as we sit under a 50 moving average, big money is going to use prices upward to facilitate their exit and rotation into another market. I know I talk with my hands a lot.
Listen, we all do. No, and that's what's so important, like you said, is understanding what the big institutional money is doing. Because people keep saying, why did this happen? Why is every dip being sold off? Why? Because it makes sense right now. They're taking that money. They're going to take that, what they're calling easy money, our dumb money.
Yes.
Right? And they're going to take it every time. So they're going to sell into all of these rips, especially when they're big 5, 7, 8% rips on an Nvidia or a Tesla.
Yes.
There are times, and like we talk about technical analysis all the time, it works until it doesn't. Tesla today, I think, seen a little bit of a short squeeze on the 0 DTEs that was pushing it even further than some resistance zones maybe would have told you. But in general, that's what's been playing out. And you got to play the hand in front of you, which is something that you also taught me, is the market doesn't lie to you. It has no emotion. It is, it's telling you, you just got to learn to listen to it once in a while, right?
Absolutely. And, that's hard because we're always thinking, we run this line of prediction versus response. So many of us who are very technical, we sometimes slip into this predictive mindset where we say, this should move here. And before the traders have told us that that's what's going to happen, we jump because we want to be in front of the move. Listen, there is nothing that feels better than selling a top or buying a bottom in a cycle. Right. You just feel like Superman.
Yeah.
However, that's not a common event. And even if it means that we're right later, our pockets usually aren't deep enough to handle that sort of thing. Right?
Absolutely. Yeah. Catching a knife will cut your arm off eventually. In fact, I had a trader today that I'm friends with who was commenting how he, dug himself out of this huge hole with some Tesla calls that he made yesterday. And I pointed out to him that is probably a bad thing, quite honestly.
Absolutely.
Because you've just trained yourself again. We've spent the last 2 years working on the fact that, hope and a prayer isn't the way to trade. And you went in with hope and a prayer and it worked. And what we see is those are the people that, eventually burn out there. That's why 87% burnout, right? Because you can only double down so many times until the market outlasts you.
Exactly. It's sort of like the slot machine mentality. Now, the thing that's really interesting about the psyche of trading in the markets is every time we get a good trade, we get that dopamine hit.
Right.
Dopamine, that's why many times it becomes an addictive environment. Like me racing here before I brush my teeth or comb my hair, right? I've learned to go, hey, I'm interested to see what the market is doing, but responding to what the traders are telling me over time versus saying, oh, I got to have my fix. And what happens is when we get a good trade, a lucky trade, like his meta bounce, and of course, that's coming right off of its edges. So hopefully he covered. When you look at that sort of behavior, your brain is flooded with dopamine. And
Right.
so you're just looking for the next hit, frankly.
You just
You're
said
not
the
looking
key.
for the next good trade.
Yeah, is not reacting but responding. I think you
Yes.
nailed it. It's something that I see as a common thread that gets talked about through all the educators at Quasar, all the contributors is, it's great to respond, but you don't want to react. We want to take the
Yes.
time to let our mind catch up to our fingers.
Exactly. 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 And you brought a great point up. One of the best books I ever read was Thinking Fast and Slow by Daniel Kahneman.
I don't know
A
that
lot
one.
of
I'm going to
people
write
quote
that
that
down.
book. Oh my goodness, it is so fantastic. It talks about how lazy the brain is in terms of quick response. So we have two systems. We have the system that says, okay, I need to balance my checkbook or get my taxes ready. And we have the system that is the snap thinker, right? You and I look at each other, or folks that are watching with us look, and we go, all right, I'm going to make an estimation about her. I'm going to make an estimation about him. That's system one. And many times we come into the market and we go, oh my gosh, that's got to be a buy zone. And it's system one. But system one does not have the ability to do complex analysis.
It has no
And
filter.
exactly. So we have to put the brakes on system one all the time to say, wait a second, am I doing the right thing here? And
Yeah.
that takes a lot of practice,
And
right?
discipline,
You gotta
right?
have
You gotta,
reps. Yes.
you,
You
you
gotta
got
have
to
the
make it
reps.
a habit, because if you don't, that's where you end up on the wrong
Oh,
side of a lot of trades.
100%.
Awesome. Well, thank you so much. I don't want to monopolize your time. We're going to have you back often. You bring so much insight for us. Again, you can find Anne-Marie at thetradingbook.com. She has a great program there, and make sure you get her books. She is, one of the best in the business. Thank you so much for coming and joining us today. What are the last words you have for us today?
Don't be emotional about no matter what you're seeing, no matter how folks want to rile us up. If you can sit and be calm in front of price, you're going to get to the next step. And here's the fantastic thing: billionaires become billionaires in bear markets.
Absolutely.
There is going to be a tide that is going to be so beautiful, but you've got to have dry powder. So
Right.
go slow.
Patience is a
Yes,
virtue. And like you said, having powder on the sidelines, again, something that you and Big Beat taught me over the last, 10 years for sure.
absolutely. Howard, it was so great getting to spend
This,
time with you on
this was
screen.
fantastic. We
Yeah,
can't wait to have you back on. Have a
absolutely.
fantastic week trading this week. Thank you so much, Anne-Marie.
Got my Dramamine. I'm ready.
Awesome. Appreciate it.
Thanks so much.
Thank you. Okay, everybody, we're going to have Charlie Moon coming in next here. Charlie, of course, is the legend, the man that used to do the podcast with me, Dips to Rips. We're going to get that back going here sooner than later. And he is the man when it comes to technical analysis, the disciple of Trend himself, Charlie Moon. What's going on, my man?
What's going on, Howard? Glad to be here, brother.
I'm glad to have you, man. I miss you. How's everything going at Prosper? And more importantly, how's everything going in the markets today?
Well, just came back from vacation. While I was gone, of course, the market's just getting crazier. We're in this kangaroo market where we're going to see sustained runs both up and down. We're going to see days that are going to look extremely bearish, turn bullish, and vice versa. And the job of traders, trading in this environment really is to read and react. You come into the day thinking only one thing, and you can get yourself into a great deal of trouble here with the expanded ranges and price movement on some of these stocks. We've seen Tesla and Reddit and names like Hood and Palantir, you know 30, 40, 50% off of their highs, and this has
Yeah.
been within the last month. So it's
Yeah.
fun times for the short-term trader, that's for sure.
Yeah, I mean, we're getting a little bit of a bounce back today, but it's how long until the next tweet takes us in the opposite direction. It is as volatile as I've ever seen in the markets. Are you trading any differently? Because I know you in the past had been a big swing trader along with day trading. Are you cutting down a little bit on your swing trades and doing more day trading? You finding or?
That's exactly right. There's a lot of inherent risk in holding overnight. We just don't know exactly how traders are going to respond and what they're anticipating as well. And due to the volatile nature of the market, we're not seeing 0.5% swings. We're seeing in the ranges of 3 to 5%. The
Right.
Nasdaq was down 4% the other day, and that had really happened in a blink of an eye. And that was compounding the other week where we were already breaking down cumulatively around 5-6%. So this is something you hit right on the head. It's a reactionary market. They're looking for the next news bit to hit the wire. Whatever is coming out of either Trump's mouth or Powell's mouth is certainly being digested and immediately ran with. And when we're in a reactionary market as opposed to an anticipatory market, things become very sharper in terms of price movement.
Right.
Liquidity drops, price movement expands, and so you just have to be very comfortable. This is similar to how it was in 2018 when um, Trump was first in office. He had started initiating tariffs on China, and then China had reciprocal tariffs, and then of course he had reciprocal tariffs. Meanwhile, he was yelling at Jerome Powell to lower interest rates, which Jerome Powell eventually actually conceded on doing. And this is kind of shaping up to be the same thing, because the moment that Jerome Powell and the gang cut those rates, we immediately corrected and went on to a really strong bull run. People think the sky is falling and things are ready to collapse, but I'm not there yet.
No, we're
CPI
with you.
data
Even
today kind of pointed to the fact that the Fed has, a little bit of leeway to work with.
yeah.
But what was really dangerous is that people were just automatically assumed today that we're going to work our way up. And remember, the CPI data comes out from the past and present, and the thought of the market dropping is due to tariffs igniting inflation in the future. So right now we're playing more of the future than the present at this moment.
Absolutely. I think that's the case. I've started to put together some wish list stuff on some of these stocks. It's
100%.
what I'm amazed to see is that I see the stock market following crypto in the fact that, everybody wanted to buy Bitcoin at 100,000. No one wants it at 75 or 80. We're seeing that with the Mag 7 and these two, right? There,
Yeah.
everybody wanted Tesla at 480. Nobody wants it at 238. What's going
It's
on?
ridiculous. No, it's ridiculous. People talked about Meta and wishing they were long Meta at $600. Like, oh, I wish I would have bought it, just a month ago. And here we are, and nobody wants to buy it. It makes absolutely no sense. It's always been that attitude where people in the stock market, and I heard you talk about, how technicals could be somewhat psychological. It's the motif of the entire market mechanism is really reliant on human emotions and the
Yeah.
human state, and it's the only place where we tend to want to buy premium prices as opposed to value
Yeah, it's
prices.
crazy. It
Yeah,
really is. You and
and
I have talked about it over the years because with crypto and, you are always in these tech stocks before anybody else was, and AI before anybody else was. And, every time, when we'd say, when we're talking to someone, is to now a good entry? No, it just moved up 38% today. Give it some time to breathe. Everything like we talked about comes back down, and then when it does, they don't want to buy it, and they're like, I'll ping the people, hey, you asked me about this, here you go, and you get crickets back from them.
Right, and and it's the same thing. And I tell everybody right now, this is the time to start nibbling.
Yeah,
The mistake that people make is that they put their bigger portion at the start of their dip buys and then try to DCA with smaller sizing. And this is really where you want to consider, for any longer term position, nibbling with 5-10% of your total allocation that you would have towards that investment, and build that position over time. Even if you're DCAing up or down, it doesn't matter, because we're looking at
right.
a broader and longer term picture. And I understand it's not easy to accumulate a lot of shares of Meta at their price point, but Tesla is a lot cheaper, offers
Yeah.
up great value. Nvidia,
Well, and nowadays you can do $100 on Robinhood.
yes,
So buy
100%.
$100 at a time.
Yeah,
I'm with you.
split shares are
That's
certainly a
perfect
thing.
advice. Perfect advice you're giving there, Charlie, is that so many people do that wrong. We're not saying take 80% of what you want to buy in Tesla and do it today. We're saying take 5-10% and start your position.
Yeah,
Big
build this.
difference.
I mean, it's Wall Street does the same thing.
Yeah.
Especially at the start of the year, they don't accumulate everything at once. We would see huge spikes in stock prices in a very short period of time. And what they do is accumulate over time. It takes them weeks, it takes them months in some instances to be able to build out the position that they want. It's the
Right.
same thing with hedge fund managers building out their positions. It takes them weeks to be able to do it. And this is something that they are looking not as a short-term venture, but more of the broader term venture. And
Right.
we're going to see a ton of this, on the next 13F filings. I bet you a lot of these hedge funds that had closed out of positions or had liquidated a lot of positions, most notably names like Amazon and Microsoft and Meta. I bet you they've been looking to add on, or have started adding on already, on these pullbacks. These are high quality companies.
Right.
They make 20 to $80 billion a quarter. And they're not going to go anywhere, and they're not going to lose any of their market share because of the dominance of the markets that they're involved in. So, it just only makes sense that on these pullbacks, these should be very favorable for the retail investors.
Yeah, absolutely. I do see Big Beats back hanging around. Let's see if we can bring him in, see what he's got to add to the conversation today.
But Steve,
Man, I saw Charlie Moon on the show, and I said, you know what, I gotta come in. I did a show with Money Mitch a few minutes ago, and man, how are you, Charlie? I miss you, man.
I miss you too, man. I'm good, man. I just got back from Arizona and trying to get my feet on the ground, but today has been fun. Today's actually been interesting because we're moving on much lighter volume than what we have seen. But I saw a statistic that they pointed out over the last 2 years on these really deep pullbacks in the Qs. We have seen what we would put into the 1% of accumulative volume for the day on those dips, and they've been reversal points. And the Qs had that measurement just the other day. So it looks like the market has a little bit of demand coming in. We just gotta see what the next tweet is going to be, as they say.
Exactly. I mean, I think 2 days ago when I called the bottom, to me it was because of the flush, right? The big flush happened, the capitulation. To me, I feel like that happened. It's for me, Charlie. It's been escalator up and elevator down, right? I mean, it's a stair stepping to the way up, and the nervousness in the retail market. But my God, $50 billion in zero DTEs in one day is just absolutely asinine to me. It's becoming a casino, and I mean, am I wrong? I mean, you're the guy that's in Chicago. You're on the floor down there, the SIBO.
Yeah, no, they are treating it as such. Institutions, and this is the funny thing. Just 2 weeks ago, this pullback, I believe the head of the trading desk at JP Morgan said, "This isn't us. This is retail that's looking to liquidate right now."
Yeah.
So we've kind of seen that retail capitulation. And right now, it just seems like short-term institutions are trying to take advantage of the momentum. But like I just said, I just believe that they're going to start accumulating these names to such a degree because, what are we moving lower on? Tariff news, the reciprocal tariff news. I mean, at some point, that's going to get priced in. It's going to get old, and we have forward-thinking measurements that come into the picture. Well, CPI is going to be one of them. And if we continue to see that consumer sentiment and CPI, expectations remain anchored and they're not dropping off a cliff, then upside it is, in my opinion. And it's going to be retail that's going to start chasing after Wall Street at that moment.
Yeah,
But
I agree with that.
explain to
for
me
sure.
how are they chasing, right? I mean, are they chasing with just with options? Are they because they're not chasing with actual dollar cost averaging their buys. They're not just going, oh, my Tesla stock is down, I'm going to buy more Tesla, because they don't have it, right? They don't have the money to buy it right now. So you're saying, and you're correct, that it's JP Morgan, Goldman Sachs. They're not selling. They're smiling all the way to the bank. They've got, as Warren Buffett said, a lot of cash on the sidelines, right? So they are the ones coming back in, right?
Yeah, names like Gunloch and a few other prominent hedge fund managers, they have taken a bit of a bearish stance in the near term, but they had it purposely designed as more of a hedge on their portfolio. They've already came out and said that these price levels are attractive. Amazon was given a strong buy rating yesterday as well. For me, a lot of the chasers are going to be trying to anchor themselves a little bit more longer term with deeper out of the money calls, but we'll see those guys chasing in on those zero DTEs.
So let me get this straight. Charlie Moon is going back to fundamentals?
No, not don't put me into that corner. But like I said, some measurements like strong buy ratings do matter, and like I said, it's not like Wall Street is ready for this market collapse. They really seem poised and anticipatory towards the upside, and they just, certainly the more and more vocalness of how ridiculous these tariffs are at this moment, and this reciprocal back and forth really is overall, and a lot of them are just saying it's ridiculous because of what it's causing the markets to do. But again, do we expect any less? Should we have expected any less with this leadership? He's shown it in 2018. We went through this in 2021 under Biden as well. And, it's not a surprise that we're really going through this right now. This is just a great opportunity for people that are looking to accumulate, and garner some, wealth in the market, both intermediate term and long term. This is the time to be advantageous, in my opinion, at least for now.
Yeah. I mean, you saw Peter Navarro, the trade rep for USTR for Trump, saying that cooler heads are going to prevail. But he's not the president, right? And you have to worry every 5 minutes when the president goes to the bathroom with his phone, what's he going to tweet out, right?
That's exactly.
That's what's scary. I just got that visual. Thanks a lot, Steve.
That gold throne room, right? But the truth of the matter is that these things are getting serious. I mean, you've got the premier of Ontario saying we're going to cut off electricity and the flow of natural gas to northern New York and Michigan. That's real numbers, right? That's real people going to get hurt. And this is not washing machines of Japan and back in the day. This is steel and aluminum, and they just added copper today to that. And if we're going to have a big rebound in housing, you're going to need copper for air conditioning and copper wire in the house, right? These are big things.
Yeah, and I actually just saw a statistic on housing where, these newly built single-family homes, in terms of inventory, is on the same scale as where we were in 2008. So, there's certainly a bit of warning signs from an economic standpoint that there could be some pretty big fallout. Again, for now, it just seems a lot of posturing. I mean, let's not forget, we still have to deal with the EU Trump hasn't even started his focus on that. He just briefly mentioned the 25% tariff on vehicles, and he really did it almost in the name of Apple. He referenced in almost the same breath, that he felt that they treated Apple unfairly. I believe this was literally the day after he met Steve Jobs at the White House, and all of a sudden he started going after the EU. And we still have to deal with China, which I believe that they're trying to schedule a meeting in June. So, this market could be just fly by the seat of your pants, at least until then.
But let me ask this, Charlie. I mean, 84,000 on Bitcoin was this morning. It's at 80,000 now. That volatility seems to be even a little bit irregular, even to me, right? There's something's just not adding up. And when I look at, so I'm looking over at the oil futures right now, and I'm looking at the 10-year, and I'm looking at the advanced decline. Everything was up earlier, and now it's down because are people profit taking, or are they just still scared, or what's the overlying theme here?
It's a combination of everything. Are they nervous in holding anything? Yes, I'm sure people took long bets into the CPI report. What have we done? 5 out of the last 6, the market has gone up off of CPI. So the odds were in favor of the bulls at this moment, even with the concerns of inflation. And again, how are we trading? Well, whenever we've had some pretty steep pullbacks at the open, we've seen some, initial rallying, a lot of profit taking from the bears, bulls trying to get in on a short-term buy. And then we've seen that immediately reverse back and press on the lows. And then when we break the lows, the bears just start running with it. And that's really the thing. Once we start seeing a little bit of shakiness in the market environment, it's been very consistent that the bears take control and the bulls get extremely hesitant. So seeing a little bit of profit taking right off the bat made total sense. Buyers being hesitant, after a 2-day jump in the markets totally makes sense. But I actually think that we're going to finish this week. And I know this is going to sound crazy. I think that we're going to finish up somewhere around 3 to 5% in the Qs.
I agree. Yeah.
2 to 3% in the SPY this week.
I
don't know if that will maintain into next week, but at least for this week.
My last 4 interviews that I did, there's an underlying theme that I've been asked 4 times. What is the catalyst that you personally need to see, not the overall market, but that you need to see to make you feel more confident about the going back in the bull side again?
I quite honestly, just things getting tighter and slowing down a bit. You could kind of see the liquidity dispersion and getting a little bit lighter, as opposed to all the bids and asks in the Qs and SPY being really stacked up. We've seen a little bit of thinning on the normal size orders that are coming in the book. So once things kind of tighten up and slow down a bit, almost like where day traders are going to get bored, I think we'll be in a really good state of recovery. The markets tend to like predictability and consistency, and again, as long as we're still kind of on the edge of our seat and looking for the next news wire hit and tweet and whatever else is going to come into the picture, that the markets are still going to be on kind of standby mode and read and react mode. We don't want to be in a reactionary market. We want to be in an anticipatory market. And that's when things are definitely calmed down and more comfortable.
All right, let's talk about that. Anticipatory. We're coming into your favorite things. Like, look, we have March Madness coming up, right? You like that? Who you got? Come on now, talk to us. Who's gonna win the whole thing?
You know what? I'm actually rooting for Duke this year.
Whoa!
Okay, the show is over now. Thank you guys, ladies and gentlemen.
Yeah, normally I'm a Duke hater.
Aren't you guys also Illinois fans? What about
Illinois hasn't looked that great. I think Big Coop down there can shake things up, and once they'll do the stars shine, they shine during the tournament. So we'll see if he could carry his team.
I am excited to see how Duke plays in the tournament this year. I think it's great. I think the SEC, personally, I think they beat each other up too much. I think they're all tiring out. If you look at watch the games lately, Auburn struggling a little bit, Tennessee struggling. So I do think it gives some some room for that. I'm going to tell you my surprise one, if they can get in, is Kansas.
I
think
knew you were going to
yeah.
say Kansas too. Bill Self, he's got the
Phil
pedigree.
Dickinson, man.
No,
He's
Bill
got the
Self, no.
pedigree. He's got the pedigree. I don't know. The team, I was shocked at how inefficient their team has been this
They look
year.
terrible, and I've watched them a bunch because I thought they would be decent to start the year. But that's going to be one. I think that's a play, though, that you want to talk about a lotto ticket. Stop doing 0 DTEs and just bet them for the Final Four. You got a better chance.
And speaking of gambling, Charlie, I was on a cruise myself. I was playing a little blackjack and poker, and of course, my favorite craps. How are the casinos up there in the Chi-Town area in Joliet? Are they full? Are they busy? Is it just normal?
Well, let me say this. I was in Arizona this weekend, and there's 2 major casinos. And I went to one of them, Talking Stick, and it was so packed. It was crazy. Every table on the floor was being used. Now, it's quite different from what I've heard in Vegas. I've heard it's slowed down in Vegas.
Right.
I know that back home, I'm in Colorado now, but back home in Illinois at Rivers, that's been wildly busy as well recently because my friends continue to play there. And they've had some recent news. They had 2 jackpots hit at that casino. So a lot of people have been trying to go and trying to hit those jackpots. And so I know they've been busy because of that. But when I was in Arizona, I could not believe how busy that casino was.
Wow. And not just the tables, but the restaurants and the hotels and everything, right?
Everything was busy. Out here in Colorado, we have an area in the foothills called Central City. And, I've driven up there once. And driving up there, there's only a 2-lane road, and I was like in a caravan of like 50 cars going up there. So they're doing pretty well, being as remote as they are.
Awesome.
Well, I'm going to step off. I'm going to let you guys go back to it. But thanks, Charlie, for being on here, man. I appreciate your friendship, and I'll talk to you guys later.
Appreciate you.
See you later, Big B. Charlie, I don't want to monopolize too much of your time, man. I do appreciate it. We're going to have to get Dips to Rips back moving here over the next month or so and
100%.
Get back on the saddle, right?
Yes, sir. Can't wait, man. Thanks
so much, Charlie. Have a fantastic day. And we'll see you back here at 12 on Quasar Markets Live with Agnieszka Wood, our trading mindset coach. On a day like today, you need it. I'll talk to you soon.